Hello, everyone. Brother Al McClaney with the weekend stewardship video. And as always, before we go too far, let's read the disclaimer. No advice should be seen as a recommendation or an endorsement, as I am not a licensed financial advisor. This is for educational purposes only. You want to do your own research, or if you have someone that you have in that capacity of a financial advisor or a registered advisor, that's what they're there for. So, this video is the first one of August 2nd, 2026. Hard to believe we're over halfway through the year, and we're quickly heading into the end of the year. About 4 or 5 months left. So this video is called "Do You Want It Fixed or to Get Well?" And the background scripture is John chapter 5, verses 6 through 9. It's a pretty familiar scripture for us believers. Is the pool of Bethesda and the person who was an invalid. And Jesus um, asked him a very penetrating question, and we're going to go deeper into that. So when Jesus noticed him, and this is the person who was an invalid, lying there helpless, knowing that he had been in that condition a long time, he said to him, "Do you want to get well?" So Jesus is asking a holistic question, and it also has a relational component to it, right? So he's talking about wellness. Notice how the invalid answers. It says, "Sir, I have no one to put me in the pool when the water is stirred up, and while I am coming to get into it myself, someone else steps down ahead of me." Jesus said to him, "Get up, pick up your pallet, and walk." Immediately the man was healed and recovered his strength and picked up his pallet and walked. So let's dive into this. So this man has had this condition for a long time. And Jesus asked him the question, "Do you want to get well?" He responded with a "No, fix my circumstances and consequent fix my circumstances" response, right? So he said, he didn't say, "Oh, I want to get well." No, he started saying, "Well, could you change the circumstances that are going on? Fix the situation." And Jesus said, "No, I'm not talking about just fixing the situation. I'm talking about you becoming healed and well." And sometimes we have to ask ourselves the question, do we want Jesus just to fix our situation? And then we go on after that situation is fixed, going on in our kind of owner mentality and keep on doing the same thing in our life, but just fix this situation versus, no, I want Jesus to come in and heal me, restore me, which is so much more. And so let's look at this from a stewardship financial scenario. Let's look at, I call the rich young ruler or the bigger barns, the rich man. So in Luke 12, verses 16 through 18, verses 20 and 21, it says, "Then he told them a story." This is Jesus. "A rich man had a fertile farm that produced fine crops. He said to himself, 'What should I do? I don't have room for all my crops.' Then he said, 'I know. I'll tear down my barns and build bigger ones. Then I'll have room enough to store all my wheat and other goods.'" Skip to verse 20. "But God said to him, 'You fool, you will die this very night. Then who will get everything you work for?' Yes, a person is a fool to store up earthly wealth, but not have a rich relationship with God." So the way I look at this is, let's apply this parable along with Jesus' interaction with the invalid. So the invalid answers the question in a "fix my situation" response, Jesus. In this story, we've got the rich young ruler saying, "Hey, I still want to be owner of my life." So, Jesus, it could be a situation where I need you to build me the bigger barge. I need you to fix the situation to where I can have the possessions and still have ownership. When Jesus is saying, no, you should be wanting and seeking relationship with me, not possessions, not wanting to still be, not me coming into your financial situation, fixing your situation, versus becoming restored and whole, fully healed. So goes back to the question, do we just want Jesus to fix our situation? Or do we want restoration, healing, made whole? And that's a relational answer. And so with that, that's the fix me or fix the situation versus do I want to be healed? And the answer for us from a eternal perspective and for relational is wanting to be made well and wanting to be healed, wanting to be restored versus fixing the situation where I still want to be in control after the situation is fixed. So with that, let's take a look at this week's earnings and some exciting earnings that are happening this week. Mainly the one that a lot of people are going to be looking at, and you may see my cursor on Tuesday after close, SpaceX. So SpaceX, of course, initial public offering where most people got in about $150, $140, and it has dropped to, I think it closed on Friday at $115. So it's going to be interesting to see what's their first earnings going to be, right? Then we've got some other companies like Caterpillar, McDonald's, Lilly, ScanDisk, which is hugely in the AI and technology, where this has gone to like, I think it's $1,100, $1,400 stock. CoreWeave is going to be interesting because that's in the quantum computing area. We've got Uber, Walt Disney. I mean, a lot of large Fortune 400 companies, everything from consumer, um, like the retail hotel in the pleasure industry, Palantir, which is in the um, cybersecurity and technology, to Pfizer, to AMD, which is squarely also in the AI, ConocoPhillips Energy. So a lot of huge companies. I'm not even naming all the companies that we have that are reporting this week. With for me, definitely going to be looking at SpaceX. So I went to a conference was hosted by Charles Schwab, and I encourage you. You don't even have to be a Charles Schwab client, and this is a free workshop. This one was called a Market Drive. It was on Saturday. Here you're taking a look at. I mean, it was packed. It was this past Saturday, August 1st, and I encourage you go out on Charles Schwab. The one for next year is not out there yet, but there is a workshop that's happening in January, which is more of a technical workshop when it comes to options. This one was more macro, but we had some micro stuff, but macro looking at the sectors. And the person that was hosting was Diane King Hall, and she's on the Schwab network. Some of you may not know there is a network that's online that is hosted by Schwab, and it's 24/7. It's live during the week, and then on the weekend you can see recorded, from the previous week. So schwabnetwork.com, or you can see it on YouTube, youtube.com / Schwab Network. And Diane King Hall does the morning movers show during the week, but she was the host for this market drive. And one of the featured speakers, the main featured speaker, was Daniel Newman of the, I think it's pronounced Futurum Group, and he was talking about AI. And here's some of the quotes that he did that kind of caused my head to snap up, and I think you can get some trade ideas off of this. So here's a couple of quotes he had. He said the CEOs are willing to have company stock prices underperform for 2 to 3 years because of overspending on AI capex, which stands for capital expenditures, because the greater risk is to underspend. And his point was that these CEOs out there understand that the risk is not overspending because um, AI is here to stay. It's entrenched. This is going to be, you know, generational change when it comes to, I mean, right? Some have said greater than the internet. And so his point was the CEOs see this risk is not overspending, but rather they don't want to be called underspending. And then he talked about where are we in this phase of AI? And he said if AI is a sporting event, we are still in the parking lot tailgating. Because some have said we're in the third inning if you equated it to a baseball game. But he was saying, no, 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 we're still in the parking lot. Then he said AI is so transformational. He used the example of Oracle that this company, I mean, has had quarter after quarter after quarter where it's a wash in positive cash flow because they had this huge amount of reoccurring positive service fees that just it was a money-making machine. But just this past quarter, they reported negative cash flow due to CapEx spending because they recognize this is so important. Goes back to that quote at the top, uh, or this the quote that we're coming up to, where conservatively these companies' return on AI capex spending will be 2 to 3 times larger than their current profit levels, and it's going to be 2 to 3 years. They'll see that. So a lot of these companies out here, they're spending so much on capex, and Oracle was a good example where here's a cash flow machine that now the CEO, and I think it's still Larry Ellison, has said we'll go negative cash flow with our capex spending. And of course, that's opportunity for all these companies like Nvidia, Micron, and they pointed out an interesting slide. So this is a price to earnings ratio slide. So what it's doing is looking at the price to earnings of a stock divided by the forward forecast of earnings. And the way this works, the way he described it, was that if a company is at one or below, it is perfectly valued or undervalued. If it's above a one, then it could be overvalued. Like Tesla's at a 4.6, right? Apple is at 3.2. But look at the ones here. There's SpaceX right at a one. Then there was Oracle, which is a 0.3, a 0 point, yeah, 0.3, not even 1%. And then there's Nvidia. So you can look at this Micron, this Sendis. You've got all of the different stock symbols here. So maybe this is an idea, not a recommendation, to look at these, stocks. Maybe in your 401k, you want to get even greater exposure to technology. Even with the recent pullback, that may be a good bargain. So I'm definitely interested. As I said, the SpaceX, the first time they're reporting, and they're at a 1.0. This is another one he mentioned. This is uh, oh, ScanDisk. That's the one I talked about. And then there was another one that's out of Korea. That's I think it's SY Sky Nix. You could just look up. It's is software or a chip company out of Korea that can't even keep up with their demand for their chips. And I can look it up real quick here because I took notes on it. But yeah, it's SK Hynix, and the stock symbol SKHY. Once again, not a recommendation. SKHY, South Korean semiconductor company, that they cannot even meet the demand they said for the next 2 to 3 years. There's so much demand. So that could be, again, not a recommendation, but something to do research on. So let's close out by looking at the market when it relates to interest rates. That's been in the news. The next Fed meeting is September 16th. This past one, they kept them steady, but they talked about the three dissenters on the Fed committee that were saying need to raise rates. So here you see the September, they're saying a 72.1% chance that there's a quarter point increase, which will send bonds higher. All right. There's an opportunity there. And here we're closing out. There's QQQ. You can see this is year to date. We were clearly in an uptrend. Now we're rolling over, could be coming back out. But remember, we talked about these companies that are willing to underperform because of their capex spending. And there's SPY, more of a channel, not as profound sell off as QQQ. That's why you're seeing these Dow component stocks, which is, by the way, 30 stocks that are doing much better than technology, but could be an opportunity. So that's it. Oh, let me close out. Almost forgot. Here's year to date with all the ups and downs. We're still up 9.6% in the S&P, right? And what are the leading sectors? Energy, war in Iran, and then technology. Even though the sell-offs, it's still up 21.8%. It's still second sector, right? The other one is industrials. That makes sense. Why? All of these build outs when it comes to AI infrastructure. So you could do this by looking at these exchange traded funds and just buy those, or look, as we've always done, you go on stockanalysis.com, put that symbol in, and see if there are any companies that you want to buy. So that's it for this week's stewardship video. We will see you next week.